Guys, in this video, we are going to talk about the stock market manipulation. Okay, so when I say stock market, it includes everything. Okay, the stocks, the indices, the futures, the options, each and everything. Before I begin, let me clear this thing that the purpose of this video is not to teach or advise how to manipulate, but to help you understand that how some people manipulate the prices which led to the losses to the retail traders. The purpose of this video is to help the retail traders to understand how the manipulation works so that the retail traders can trade carefully and can identify the traps, the manipulation, and can save themselves. In this video, we will be more focused to the S&P 500 index and these the manipulation techniques. So we will talk about these the manipulation techniques in reference to the S&P 500 index. So guys, before we talk about the manipulation or the manipulation techniques, we need to understand that what is the stock market. Okay, so a stock market is a place where we have the buyers and sellers, and these buyers and sellers, they are participating in the trading. Now the question is that buyers and sellers of what? Buyers and sellers of the stocks, futures, commodities, options, okay, means the derivatives, etc. And other than this, the buying and selling, you also need to understand that there is an exchange, okay, in between these the buyers and sellers. So buyer will place his order to the exchange, seller will place his order to the exchange, and finally the exchange will execute, and the exchange will match the order and it will execute the order. And this is how, okay, the buyers and sellers, they will participate in the trading. Now, as I mentioned that we are more focused on the S&P 500. Okay, so through S&P 500, okay, we will cover each and everything, the commodities, okay, and the stocks and the futures and the options. Because we are emphasizing on the S&P 500, so we need to first understand that what is the S&P 500 index, okay, and what are the constituents of the S&P 500 index. So when we say index, okay, index means a collection or a group of companies or a group of components, okay, or a collection of companies or a collection of components. Okay, so when we say S&P 500, so if you look into the history of the S&P, okay, earlier it was S&P 90, I guess, okay, and then it was S&P 233, and now it is S&P 500. But there are more than 500 companies. I guess there are 505 or 510 companies in the S&P. Okay, but we still call it as the S&P 500. And this the S&P 500, okay, or the S&P, it has a history of almost 100 years. Okay, so now when we talk about the S&P 500, we need to know, okay, what are the companies that are there in the S&P 500. So there is a list of these companies. Okay, so you can see we have Apple, we have Microsoft, we have Amazon, Alphabet, Tesla, okay, then some other companies. But most of the companies, now if you look into the top 5 companies of the S&P 500, okay, they are all tech companies, okay. This means that yes, sometimes you can see that, or most of the times you can see that the S&P 500 index is not telling you or is not showing you the real face of the economy or the economic situation, okay, what is happening in the economy, because the top 5 components, the top 5 companies are the tech companies. And tech means tech is just one sector. Then we have manufacturing sector, okay, we have energy sector, and we have multiple sectors. So this is a long list, okay, a very long list, and there are these more than 500 companies, so let me show you, okay, in actual how many companies we have in S&P. So there are 504 companies, okay, as per this particular platform. So now we have seen that there are 504 companies in the S&P 500 index, okay, but each and every company has a different weightage, okay. So weightage means, if you look into the Apple is at the top, and the weight of the Apple is almost 7%, okay. This means that if something happens in Apple, means if the Apple moves up or if the Apple comes down, because the weight of the Apple is 7%, then it will definitely affect the movement of the S&P 500 index. Okay. Then we have the Microsoft 5.84%. Then we have Amazon. Then we have alphabet A and alphabet class A and class C. Okay, so if you look into the top 5 companies and if you just add the weight, then 7 6, then 7 7 and 6 is 13, 13 and 3 is 16, and 2 18, and 2 20. So these top 5 companies, okay, the weightage of these top 5 companies is almost or is just more than 20%. 20%. So you can say that out of 504 companies, only 5 companies, okay, they have a weightage of 20%. This means that the movement of the S&P 500 index is purely or is mostly defined by these 5 companies. So whatever happens in these 5 companies, the same will be reflected, most likely the same will be reflected in the S&P 500 index. So now you know, okay, what the S&P 500 index is, what are the constituents of the S&P 500 index, okay, and what is the weightage of the top 5 constituents of the S&P 500 index. Okay, so this information will help us, okay, to understand that how the S&P 500, okay, can be, I repeat, can be manipulated. Okay, and again I repeat, the purpose of this video is not to teach you or is not to tell you or not to tell anyone, okay, how to manipulate, but is to help the retail traders to understand, okay, how the traps are formed and how some people, okay, willingly they manipulate or they try to manipulate the S&P 500, okay, and the stocks and the other indices, okay, and that results in the losses to the retail traders. Okay, so I'm just trying to help the retail traders to understand so that they can avoid falling into the traps. Now before we talk about these the manipulation techniques, okay, you need to understand that particularly the American markets, okay, American markets are heavily regulated, and we have the Securities and Exchange Commission, okay, that is continuously monitoring the market, okay, the illegal activities in the market. So this means that see, manipulation, it can happen, okay, anywhere, okay, irrespective of the agency or irrespective of, you know, anything else. So there is one more advice, that if you see or if you find, okay, means something fishy, or if you think that, you know, someone is manipulating the stock or currency or price or the index, okay, then you can go to the SEC, the Securities and Exchange Commission, or other federal agencies, and you can report this thing to them, and they will further investigate the matter. Okay, but in this video we are going to talk about, okay, these techniques, so that as a retail traders, okay, you can avoid falling into the traps. Okay, so first, let's talk about the manipulation techniques. So first comes the circular trading. Now, what is this, the circular trading? See, I told you that we have the buyers and we have the sellers. Okay. So the circular trading means that there will be a buyer and there will be a seller. Okay. So buyer will buy and the seller will sell. Now, in this case, particularly when we talk about the circular trading, these buyers and sellers, okay, they are either friends or business partners, or they know each other, and now they have a deal. Okay, now what kind of deal? Deal means that they have decided that the buyer will buy, okay, the stocks worth, like, you know, $10 million, okay, or maybe just $1 million, okay, or maybe like $50,000, and the seller will sell exactly the same quantity. Now if both of these, okay, the buyers and sellers, these the market manipulators, okay, who are trying to manipulate the stock or the index, okay, or the commodity, so when they want to move the price up, in that case what they will do, the seller will raise the selling price. Okay, so the seller will place, you know, multiple orders, okay, and he will raise the price. Other than that, the buyer will also raise the buying price. Since the seller has raised the selling price, buyer will raise the buying price. Okay, and you, means the retail traders, and you might have been thinking, okay, that let's wait for the opportunity, okay, let's wait for the price to come down. Then you will see that immediately something has happened and the price is now moving up sharply. Okay, so when the price moved up sharply, then the retail traders, okay, retail traders panic. Okay, retail traders, they panic, and this panic is what works in favor of these the market manipulators, because the purpose of means the market manipulators, they try to create panic in the market or panic among the retail traders, okay, so that they can complete their activity. So now it will create the panic, and the panic will result to that retail traders, the retail traders will think, okay, now the price is moving up and they do not want to lose the opportunity, so they will further, okay, so they will again participate in buying. They will try to buy at the market price. So this buyer, okay, this the friend of the seller, okay, this buyer is buying aggressively, okay. See, if he is planning to invest 10 million, then he will not invest 10 million all at once. So let's say, okay, he will pump $2 million, okay, $2 million. So with this 2 million, he will raise the price by 0.5%, okay, 0.5%. Now after pumping in $2 million and by raising the price by 0.5%, then he will wait for some time. Now the retail traders, okay, so when I say that he will wait for some time, this means that you will see that there is a heavy candle, and then the next candle is a very small candle, okay, and then the next candle is again a very small candle, okay, then again a heavy candle. So this is how it works. So first he will pump like $2 million, okay, then he will wait for some time, for 1 hour or for 2 hours, and in this the 1 or 2 hours, okay, he will leave the trade to the retail traders. So now only retail traders are participating in the trading, and that is why there is no movement in the stock or in the index, okay. So for 1 or 2 hours or like 15 minutes or 30 minutes or so, okay, then the market manipulators, okay, they will again come into the picture. Then he will invest again like $2 or $3 million, and then again a heavy bull candle, okay. So this will again create panic. So there is a theory in physics, okay, in physics we have the wave motion, okay. So we have multiple waves. So if you see that when there comes the multiple waves, so the multiple waves are most effective, okay, and this is why they are not pumping in 10 million all at once, okay. So see, and one more reason is that they want to avoid being noticed by the regulators, okay, by the Securities and the Exchange Commission and the other federal agencies, okay. So this is why they are pumping enough money to move the market up, but they are at the same time they are trying to get noticed by the regulators, okay. Now after this candle, again they will leave it to like 1 or 2 hours, okay, 15 or 30 minutes, then there will be one more candle. So this is how the price will move up, okay, the stock price will move up. And if the stock has a significant weightage in an index, then the index will also move up, but not in that actual percentage. For example, the stock has moved up like 5%, okay, then the index will move up like just 1% or maybe 2% or 1.5%, maybe like 0.75%, okay. Because see, in order to manipulate an index, okay, the manipulators have to pump a lot of money. Secondly, they need to pump a lot of money in multiple heavyweights, okay. So when I say heavyweights, if you see that in this case the Apple is 7%, Microsoft is 6%, Amazon is 3%, and so this means that they need to pump the money, okay, at the same time in multiple heavyweights, so that in total, so means there will be an aggregate, okay. So there is an internal calculation of the price. So through that the calculation, so the machine, okay, exchange is what? Exchange is the machine. So the machine will calculate the price, and accordingly, okay, it will move up the index. So when the stocks are moving up like 4 to 5% in that case, and if these are the heavyweight stocks, in that case the index will move up like 2%, 2 to 5, 2.5%, 3% or so, okay. So now so this is how, okay, the buyers and sellers, okay, so they have a verbal contract that they will do or they will participate in this kind of illegal this activity, okay, of the market manipulation. Now the question is that if the buyer is buying and the seller is selling, okay, and later what will happen, that once the price has moved up, a lot, then they have to sell. And because they will sell, means the buyer, okay, who is currently buying, then he will have to sell. And when he will sell, then the seller will come into the picture, then the seller will become buyer. and the buyer will become seller, okay, and then the market will come down. Now the question is that because the buyer has bought, okay, at some price, seller has sold at some price, okay. Now when they sell, then how they are going to make money, okay. So there comes this one thing. Number one, that they will not just they will not just increase the price, okay, on just like one day, okay. They will increase the price for 2, 3 or 4 days. So one day this person is the buyer and the other person is the seller. The other day this person is the seller, the other person is the buyer, okay, and they are using different trading accounts. I say different brokers. So now these clever people, these manipulators, what they do, they have multiple trading accounts with the multiple brokers. Okay, and not just in their name, okay, but in the name of their associates, okay, and some other, these names. So see, the person is same. These two people, they are the same, okay, and the deal is in between these two people, and they have their, their associates, okay, or their other friends also, and their, different trading accounts and so. So one day this person is acting as buyer, this person is acting as seller. The other day this person will act, so this person will act as seller through a different broker platform, okay, or through a different broker, and the other day this seller will act as a buyer through a different broker, okay. So one day it was one buyer and the other, so one is acting as buyer and the other is acting as seller. The other day the seller will be buyer and the buyer will be the seller through the different broker. Then the other day again they will change the sides, okay, buyer and seller through the other broker. So after 2, 3, 4 or 5 days, okay, when they think, okay, now there is so now they have moved up the stock, okay, or the index, okay, but most of the time, okay, it is the stock, it is not the index, okay. So it is the stock. So when they think that they have moved up the stock, okay, heavily by some percentage points, and now it is, and now they need to dump, okay, means they need to close the trades before being noticed by the, these the agencies, okay, these are regulators. Because if the price of a stock, okay, if it moves up continuously, so if the price of the stock is continuously moving, okay, up and on the daily basis like 3 to 4%, 5% every day, okay, so that will definitely, everyone will notice that the movement in the price, okay. So in order to avoid that, so momentarily what they will do, that one day it was up, the other day it was up, the third day it will be a bit down, or the market or the stock price will hold, because third day they are not going to trade, so they will leave it to the retail traders because they do not have enough volume. So this means that there won't be any significant change in the stock price, just a bit up or down, that's it, okay, nothing else. Then the other day they will again come into the picture and then it will move up and so on, okay. Now comes the selling time, okay. So this was the upward movement, now comes the selling time, so now they will sell. So when they will sell, then again they will switch their positions, okay. So buyer to seller, from buyer to seller to seller to buyer, okay, through their different brokerage platforms, okay, or brokers. This is how they are going to make money. Other than that, okay, they also make money because see, they are manipulating the market, they are manipulating the stock, okay. They know, okay, how to manipulate the stock, and they know where the stock is heading to. This means now we talk about the options, okay. So options means the derivatives, the futures and the options. So in options we have the calls, okay, and we have the puts. Now because both of these A and B, okay, the buyers and the sellers, okay, so not sellers or buyers, but the buyer and the seller, they have decided to move up the market. So what will happen now? What happens is that either both or one party will buy the calls, okay, because see, they are moving up the market and they are playing in the stock, they are not playing in the options. So in the options, okay, there are some other traders, okay. So what they will do, they will buy the calls, okay. Now why they are buying the calls? Because they know that the market is going to move up and the call price will increase. And why they are selling the puts? Because they know that because the market is going to move up, means the put, this the put price, okay, this the put options, okay, it will decrease. And so this way, while they are manipulating the stock, they are making money in the stock, they are also making the money in the options. Okay, and sometimes what happen is that they do not make money in the stock. Okay, they simply move up the stock or move down the stock, and they make money entirely through the options, through the options only. Okay, so when they know that the market is going to move up, so they will buy the calls, okay, and they will sell the puts. Now when they have decided, okay, so let's keep the market, okay, on this the particular price range for 2 to 4 days or for a week. In that case, they will sell the calls and they will sell the puts, because in calls and puts, okay, we have the theta. So theta is the decay, okay, the time decay. So within 4 to 5 days, there will be enough decay in the calls and puts, and they will, and because they have sold the calls and puts, okay, and they have already made a lot of money, then the next week, okay, they will again participate in their activity, they will buy, sell, and etc. So this is how through the circular trading, one is buying, one is selling, and this is how through the circular trading, these the manipulators, they are manipulating the market. Okay, now how to identify the trap? So like I told you, that you will see that one candle, very heavy candle, then the next candle is again a heavy candle, or the market after this the heavy candle, the market is stagnant, it is holding for 1 or 2 days, for 1 day, for 2 or 3 days, then again there is a very heavy candle, okay, or there are successive heavy candles. Okay, see, I'm not talking about the bear movement. Okay, I'm talking about the bullish movement, the bull movement. Okay, so I will cover the, see, the manipulation in the bear movement is different from the manipulation in the bull movement. Okay, so this is how you can identify that if something is fishy, if something is not adding up, if there is no news, nothing, okay, and still the price is moving up, then definitely, okay, there is, some kind of manipulation, or there may be some kind of manipulation. Okay, now other than that, okay, there we also have this the insider trading, okay, that we will cover in the some other manipulation techniques. Okay, so now comes the next part, okay, that is the pump and dump. So pump and dump, okay, it is again a part of, you can say, the circular trading. Okay, means you will see that again the market manipulators, okay, one is the buyer and one is the seller. They are pumping the money in the stock, they are buying, okay, they are accumulating the stock, they are buying a lot of this the stock, okay, and then at some point of time they will dump it all, and you will see a collapse, okay, that the stock is collapsing on the daily basis, 2 to 3%, 3 to 4%, stock is just coming down, it is coming down without even retracing. Okay, and that is the pump and dump. Now comes the other technique, okay, and this is the poop and scoop. So this is the ugly name, okay. So this ugly name, okay, because the technique is very ugly. Okay, so ugly technique means what they generally do. Generally, what they do, that they spread the news, okay, news. And let me tell you, one thing about the news. News, okay, is something that is most of the time, okay, that is fabricated. Okay, especially in the perspective to the stock market, news is most of the time it is what is fabricated, until and unless you see, for example, if you see that the Feds, okay, they are going to raise the interest rates, and when the Fed chairman, okay, he announces the interest rate, so that is the genuine news, that is the genuine news, because you are seeing himself, okay, and he's talking about the interest rates, the economy, so that is the genuine news. And yes, you should listen to him. And whenever the Fed chairman is talking about something, yes, you must listen to him, that what he is talking about, because he is telling you that what is happening with the economy and what may happen to the economy. So he is telling you, okay, these things, and whatever he is saying, okay, his statement and his words, so this matters a lot. So that is the genuine news. Now what is the fabricated news? Fabricated news, that you are reading an article. So you are reading an article, and this article says that these five stocks are the growth stocks, okay, and these five stocks will give a return of 100% or 50% return, or 1000%, etc. Okay, so that is the fabricated news. or you will say that the anchor, okay, the news anchor, okay, who is presenting the news or who is reading the news, this news anchor is talking about something, okay, that you cannot relate or that he cannot give a reference to. So this news anchor, he cannot say that the feds or someone has, or some official person, okay, he has said this thing, okay. He's simply saying that because the market is fearful or the market is hopeful, there are bull sentiments, there are bear sentiments. This simply means that whatever he is saying, okay, through this news channel or through any other this the news medium, so he is simply telling you his views. But in general, in particular, okay, he doesn't have any of his own views. This is all what happens back in the studio. So what happens in the studio, that there are 2 to 4 people, and these 2 to 4 people, okay, they decide, okay, what information to be sent to the market, okay. And these 2 to 4 people, they get this information from someone, okay, who want to drive the market. So this someone will say, okay, he want to drive the market up, so he will send the information to these the 2 to 4 people, and these 2 to 4 people, okay, they will then tell the news anchor, okay, or the person who is writing the blog, okay, or these things. Then the anchor, okay, or the person who is writing the blog, he will talk about whatever this someone wanted to say, okay. So this person will say, okay, now the market is hopeful, market has already touched the bottom and it is moving up, and now there are bull sentiments, and now so for example, if we talk about the S&P 500, okay, so yesterday, see, today, okay, this is 21st of July. Sorry, I forgot to tell you, this is 21st of July 2022, 21st of July 2022, okay. So on 20th of July 2022, that was yesterday, the S&P 500 closed at 3959, okay. So now we were talking about the market manipulation. So these means through multiple mediums. So what they will say that now everything is well, everything is good with the economy, the market is moving up, and it is heading towards 4500 or 5000, okay, or by the end of 2022 the S&P 500 will hit the 5000 or maybe 6000 or so, okay. So you will hear this kind of news from the market, okay. And because you are heavily relying on the news to trade, so what will happen that, or see, you are, because you are heavily dependent on the news to trade, this means that you are forgetting about what is happening on the other front, okay. And when I say the other front, okay, let me show you. Now the other part of the economy is that as on 20th of July 2022, the inflation is 9.1, okay. Last month it was 8.6, and now it is 9.1, and that is the reason why the Feds are raising the interest rates by 75 bps and are expected to raise the interest rate by 100 bps. I look into the technicals more than the news, okay. So I am heavily relying on my technicals rather than the news, and that is the reason why I am able to give you the most accurate analysis of the S&P 500. So now if you look into the technicals are extremely bullish, extremely bullish. So the technically the inflation is bullish. This means that next month, in the month of August 2022, we can see that the inflation is further moving up and hitting 9.5 to 9.6. And this is the same thing that I've told you in the month of May and June. Then comes the bond yield, okay. Now the bond yield, see, bond yield, whenever we look into the recession, whenever we look into the economy, okay, we look into the 2-year bond yield and the 10-year bond yield, okay. Whenever everything is good, whenever the situation is good, whenever the situation is good, okay, everything is going normal, the 10-year bond yield is more than the 2-year bond yield, okay. Now what is happening is that the 2-year bond yield is more than the 10-year bond yield, okay. And now this is constant. So like for last many days, okay, now this thing is constant, that the 2-year is continuously, okay, it is more than the 10-year bond yield. And historically in last 80 years, 80 years, okay, this is a clear confirmation of the recession. So whenever this happens, okay, the market accepts that there is a recession. Okay, the 2 year and the 10 year. Okay, so these two things, bond yield and the inflation rate. So these two things are into the picture. So this is the other side of the economy. Okay, so poop and scoop. Okay, generally it means that spreading some news, some information, generally the false information, okay, untrue information, the bad information about a company, about a business, so that the business, the stock price will collapse or the stock price will come down. Okay, because of this thing, when the stock price will collapse, when the stock will come down, then they will come into the picture, and then they will buy, and then they will again spread a good news about the company that now there is a bottom. Okay, now there is a bottom and you can buy, and because the price is going to move up, everyone will participate in this buying, etc. But again, poop and scoop, pump and dump, okay, the circular trading is mostly involved there. Okay, so this is how they do. Okay, this means this is how they use this the technique. They do the manipulation through the news, okay, by spreading the false information, okay, the bad remarks, the bad things about the company. But sometimes they also do this thing that they send the information to the market, okay, through the news, again through the news, that this company is doing very well, the stock is moving up and the target price is, so currently, okay, that stock is trading at 500, okay, $500, and they say that the target price is $1,000, okay, within 1 quarter or within, 6 months. So when there will be a news about this thing, okay, so what will happen, that the retail traders, they would like to jump in, okay, they would like to participate in the trading, when and as soon as they come into the picture, okay, then the manipulation happens. Okay, that is the poop and scoop. So guys, as of now, okay, we have talked about the circular trading, how it works, okay, how the manipulation is done through the circular trading, then the pump and dump technique, okay, then the poop and scoop technique, okay, this is the manipulation techniques. And now there are many other manipulation techniques, okay, and because as I mentioned in the beginning of the video, that everything will be in reference to the S&P 500 index. Now because this video is getting longer, so I will now release the part 2, means the second part of this, the manipulation, okay, on 28th of July, on July 28th, that will be the next Thursday. Okay, so there will be a part 2. In part 2 we will talk about the some other manipulation techniques, okay, like bear raiding, okay, stock bashing, okay, and some other techniques. So there are many other techniques, and then we will look into the S&P 500, that how through all of these the manipulation techniques, how the S&P 500 can be or is manipulated. And also you can join my YouTube community, okay, through the YouTube membership. So through this YouTube membership, I help my members on the daily basis. So I give them the technical analysis, okay, of the S&P 500, and also through the community notes, and the community post, okay. So guys, this is my channel page, and I've given the link in the description and also in the comment section. Okay, so you can visit the link. This is my channel page. Okay, if you look into my channel page, okay, so there are many members. Okay, and if you see that I am releasing these updates. Okay, so yesterday I've released this update on 20th of July. Okay, this was the midweek update, and this was to the members only. Again on 19th of July, okay, I've released an update that was for the members only. So almost every day or every other day, okay, I am giving these the video updates, the detailed technical analysis of S&P 500, okay, almost on every day or every other day to my members, so that they can trade safely, okay, they can avoid falling into the traps of the market manipulators, okay, and they can make money. So yesterday on 20th of July 2022, I told them that, see, there comes a 61.8% of the Fibonacci retracement, 3971, and you can make money. And yesterday, okay, my members, they made some good money. So if you see that yesterday my members, okay, they made money, and one of my member, okay, he has mentioned that he has some good money. So guys, you have seen that I'm giving the timely updates, okay, the video updates and my notes, okay, and I'm keeping my members informed, okay. And this is the reason why, okay, my members, okay, they are trading wisely and they are now trading safely. So guys, in order to join my YouTube membership, all you need to do is to visit, okay, the link that I've given in the description and in the comment section of this video. So once you click on the link, then you will see, okay, this is my YouTube channel page and this is the join button. So when you click on the join button, now once you click on the join button, then this pop-up will open. In this pop-up, okay, you have only one midweek update and all midweek updates. So only one midweek update means only one update per week. Update means one video, one midweek video per week. And all midweek update means that whatever I am going to post, okay, whatever information I am going to convey, you will find or you will get each and everything, okay, whether I am writing the notes, okay, or I am posting the videos, you will get each and everything, okay. So all you need to do is that you need to click on the join button. And if you see that many members, okay, they have joined this the YouTube membership, and most of the members have gone for this the all midweek updates, okay, and that is the reason why they are getting each and every update, okay, on every day. Okay, so if you see that there are many members, okay, who have joined my YouTube membership, okay. So it is simple, it is easy. So you can simply click on the link that is provided in the description of the video. So once you click on the link, okay, then it will open my YouTube channel page, and all you need to do is to click on the join button and you can join, okay, this is the YouTube membership. So guys, stay tuned, okay, and do not forget to subscribe and click on the bell notification icon, and so that when I will upload this video on next Thursday on 28th of July, so you will immediately get a notification. And in that video, okay, we will talk about some other manipulation technique, okay. So there are like 4 to 5 more manipulation techniques that we are going to cover in that video, okay. And then finally we will use, okay, all of these the manipulation techniques, and we will see, okay, how these techniques are used in the S&P 500, okay, or in reference to the S&P 500 index.